All right, so get this. Today we're diving into something pretty wild. We're talking about how a potential ceasefire in Ukraine and, maybe even thanks to President Trump's involvement could really shake things up in the crypto world, especially for Bitcoin.
That's a really interesting angle.
Yeah.
We often see Bitcoin react to like global uncertainty, but what happens when things actually start to settle down?
Yeah.
It's a question worth exploring.
Exactly. And to help us kind of break down all this, we've got this audio excerpt from the Blockchain DXB podcast,
Okay.
recorded on March 12th, 2025.
All right.
And they dropped this episode just hours before some crucial inflation data hit the news, so their insights are like super timely.
Talk about being in the right place at the right time.
I know, right? So the big news that day was Ukraine agreeing to a ceasefire with Russia, potentially brokered by President Trump. But here's the million-dollar question.
Okay.
What does peace, or even the idea of peace, have to do with the price of Bitcoin?
Well, if Bitcoin often acts as a safe haven asset during times of uncertainty,
Right.
what happens when some of that uncertainty fades away?
Yeah.
Does it become less appealing? Does it become less attractive to like institutional investors who might have flocked to it during those kind of volatile times?
Yeah.
It really makes you think.
It does. Now, the Blockchain DXB host seems to think that this increased geopolitical stability could actually bring more institutional investors to crypto.
Okay.
Maybe they'll see it as less risky in a more peaceful world.
That's one possibility.
Right.
But I think we also have to consider like the other forces at play.
Sure.
Things like shifting sanctions on Russia can really change the flow of crypto, impacting liquidity and volatility.
Oh, and let's not forget about Putin's recent interest in crypto as a way to, sidestep those sanctions.
Yep.
The podcast host speculates that this could lead to like much wider adoption in Russia, which could have global implications.
Absolutely. And, think about the potential for crypto to play a big role in post-war reconstruction and humanitarian aid in Ukraine. Its speed and efficiency could be incredibly valuable in those situations.
Okay, so we've got ceasefires and potential peace deals and all this geopolitical intrigue. But the other big story brewing that day was the impending U.S. inflation data.
Right.
The podcast actually emphasizes the Bureau of Labor Statistics website, www.bls.gov, as like the ultimate source for accurate information on this.
Okay.
They even mentioned Jerome Powell, the Federal Reserve Chair, who would be making some major interest rate decisions based on that data decisions that could send shockwaves through the crypto market.
It's amazing to see how these traditional economic indicators like inflation are becoming so intertwined with the crypto market. Investors are definitely paying attention.
For sure. Now, the Blockchain DXB host was actually predicting a slight decrease in the inflation rate. He pointed to a couple of interesting things like President Trump's tariffs and investments, which he believes are attracting capital to the U.S.
Now, while that's a compelling idea, the relationship between tariffs, investment, and inflation is pretty complex. It's not a simple cause and effect scenario. Other economists might have a different take on that.
You're right. It's always good to get multiple perspectives. The host also brought up Elon Musk's efforts to expose like fraud and waste within the government as a potential factor in curbing inflation.
It's an interesting idea, but realistically, while Musk's efforts might contribute to that in some way, the impact would likely be pretty indirect and difficult to measure.
Good point. And even if inflation did cool down, there are always other factors like regulatory uncertainty that could impact Bitcoin's price.
Yeah, for sure.
Speaking of regulation, the podcast also digs into the U.S. House hearings on stablecoin regulations, which was a major topic back then, and as you know, it's still relevant today.
Oh, absolutely. Stablecoins are fascinating because they aim for that stability often pegged to the U.S. dollar, but their lack of regulation has raised concerns about, potential risks to the financial system.
Right. And the Blockchain DXB episode really highlights the political divide on this issue. They talk about Republicans like Tom Emmer, who are generally supportive of stablecoin regulation as a way to encourage innovation while protecting consumers.
Yeah, what's interesting here is that, right-leaning views often align with Bitcoin's decentralized nature, the idea of disrupting those traditional financial systems.
And then they bring up the Democrats like Maxine Waters, who are more skeptical of crypto as a whole. They generally favor more government control and oversight of financial instruments, including stablecoins. They even mention President Trump and his strong stance against central bank digital currencies, or CBDCs.
This really speaks to the larger ideological debate about the role of government in the economy. Those who prefer less government involvement tend to be more open to cryptocurrencies, while those who favor more regulation might be a little bit more wary.
It's really fascinating how these political ideologies are playing out in the crypto space.
Yeah, it is.
But let's shift gears to something a bit more dramatic. The Blockchain DXB podcast also covers the Mt. Gox saga, which, for those who need a refresher, was that major Bitcoin exchange collapse back in 2014 that left creditors hanging for years.
The collapse of Mt. Gox was a pivotal moment in Bitcoin's history. It exposed the vulnerabilities of early cryptocurrency exchanges and highlighted the need for robust security and regulation.
Absolutely. And the big news in this particular podcast was that Mt. Gox had just transferred a massive amount of Bitcoin, 11,834 BTC, worth about $1 billion at the time, to an unknown wallet.
Wow.
This sparked all sorts of theories about what was happening.
A transfer that large could definitely spook the market and drive down the price.
No kidding. Some folks thought it was a sign that creditors might finally get repaid ahead of the October 31, 2025 deadline.
That was definitely a possibility, especially given the timing of the transfer.
The podcast host also emphasized the publicly verifiable nature of Bitcoin, which meant anyone could track these transactions and see where the money was going.
And that's a key feature of blockchain technology.
Yeah.
This level of transparency is unprecedented and has the potential to reduce corruption and mismanagement.
Transparency is definitely key in the crypto world. Okay, before we wrap up this section of the Blockchain DXB recap, let's quickly touch on a couple of AI-related news stories from Dubai and the UAE.
Okay.
The podcast definitely highlights the growing trend of international collaboration in the AI space.
Right.
These partnerships could lead to some major breakthroughs in addressing global challenges.
Yeah, I agree.
First up, they discuss a partnership between Oracle and Open Innovation AI. These two teamed up to accelerate AI adoption in the region, focusing on data security and complying with local regulations.
That makes sense given the increasing importance of data privacy and security as AI solutions become more widespread.
Next, they talk about a collaboration between Italy's Synesthesia and the UAE's G42.
Okay.
They're working to enhance Abu Dhabi's urban management with AI-driven solutions, and this project had a $2.5 billion investment behind it, with plans for an IPO in a few years.
You know, applying AI to urban management is a fascinating development. It has the potential to create more efficient and sustainable cities worldwide.
It's incredible to see the real-world applications of AI evolving so quickly, but that's just a taste of what this Blockchain DXB episode covers.
Indeed, there are a lot more layers to this story, especially when it comes to the potential long-term effects of a Trump presidency on the crypto world.
Which is exactly what we'll be diving into next.
So, as we dig a little bit deeper into this Blockchain DXB episode, it's clear that the host is pretty optimistic about the crypto landscape under a Trump presidency.
Yeah, he seems to believe that, Trump's policies create like a favorable environment for cryptocurrencies. He even brings up Trump's stance against those central bank digital currencies, or CBDCs, as a positive sign. What do you make of that?
It's interesting because, CBDCs represent a fundamental shift in how we think about money.
Yeah.
They're essentially like digital versions of a country's fiat currency issued and controlled by the central bank. Some people see them as a natural evolution of money in a digital age, while others worry about the potential for, increased government surveillance and control over people's finances.
That's a really good point. And the Blockchain DXB host definitely frames Trump's opposition to CBDCs as like a win for the crypto community, especially, those who value that decentralization and individual financial freedom.
Right. And he also highlights Trump's support for deregulation in the financial sector as another positive sign for the industry. But remember, deregulation can be a double-edged sword.
Oh, yeah.
While it can create more opportunities for innovation, it can also lead to increased risk and instability if it's not implemented carefully.
He kind of contrasts this with what he sees as the more skeptical views of Democrats like Maxine Waters, who he claims are not fans of Bitcoin or cryptocurrencies. Do you think that's a fair assessment?
I think it's important to avoid painting entire political parties with such broad strokes. While it's true that some Democrats have expressed concerns about cryptocurrencies, others have been more open to their potential benefits. And even those who are skeptical often raise valid points about the need for consumer protection and preventing illicit activities.
That's a really important point. It's easy to fall into the trap of, oversimplifying complex issues.
It is.
Now, one of the key themes that keeps coming up in this episode is that interplay between like traditional finance and the crypto market.
Yeah, we see this most clearly in the discussion about inflation and interest rates. The host really emphasizes paying attention to these economic indicators and understanding how they can influence investors.
He even recommends the Bureau of Labor Statistics website as like the best source for accurate inflation data. I think that's a great tip for anyone who's interested in understanding the economic forces that are shaping the crypto market.
Absolutely, and it highlights how interconnected these two worlds are becoming.
Right.
Crypto is no longer operating in isolation. It's increasingly influenced by and influences those traditional financial markets.
Speaking of influence, the episode dives into the ongoing debate about stablecoin regulations, and the host clearly supports, strong regulations in this area.
And that's understandable, given the potential systemic risks that stablecoins could pose if they were to become widely adopted without proper oversight.
He compares stablecoin issuers to banks and argues that they should be subject to like similar levels of scrutiny and regulation.
This is a perspective shared by many regulators and policymakers around the world. The call for how to regulate stablecoins is a complex one, and there are many different approaches being considered.
And this is where things get really interesting. The host celebrates the overturning of the IRS DeFi broker rule under the Trump administration as a major victory for like the decentralized finance community.
Now, for those unfamiliar, this rule would have required decentralized entities to collect user information.
Right.
Many in the crypto space saw this as a threat to privacy and innovation.
Exactly. And the host portrays this as another example of Trump supporting the crypto industry and limiting government overreach.
That's certainly a narrative that resonates with many crypto enthusiasts. However, it's important to remember that there were other factors at play here,
Yeah.
including, the lobbying efforts of various industry groups and the evolving understanding of how decentralized finance actually works.
You're right. It's never as simple as it seems. Okay, so we've talked about geopolitics, economics, regulation, and even a bit of political philosophy.
It's been a lot.
But there's one more fascinating piece of this episode that we need to explore, the Mt. Gox saga.
The collapse of Mt. Gox was a defining moment in the early history of Bitcoin. Not only did it result in, significant financial losses, but it also shook confidence in the entire cryptocurrency ecosystem.
It was a major setback for sure. The episode revisits this event, specifically the recent transfer of that massive amount of Bitcoin from a Mt. Gox wallet to an unknown address.
That transfer really had people speculating. Some thought it was a sign that creditors might finally be getting repaid.
The host points to the transparency of the Bitcoin blockchain, which allowed anyone to follow these transactions and see where the funds were going.
This inherent transparency is one of the most compelling aspects of blockchain technology. It has the potential to increase accountability and reduce those opportunities for fraud or mismanagement.
Right. It makes you wonder if all financial transactions were recorded on a blockchain, would we see less corruption in governments and institutions?
That's a thought-provoking question.
It is.
The host seems to suggest that if government transactions were on a blockchain, there would be less room for, shady dealings.
It's definitely an interesting idea and one that highlights the potential for blockchain technology to disrupt those traditional systems and create a more equitable and transparent world.
This utopian vision certainly appeals to many, and it's one of the reasons why, blockchain technology has captured the imagination of so many people.
Okay, so we've covered a lot of ground here. We've discussed the possible effects of the Ukraine ceasefire on crypto, the influence of economic indicators on the market, the ongoing debate around regulation, and even the potential of blockchain to transform governance. What a whirlwind.
It's been a fascinating journey through a pivotal moment in the crypto world. It seems the Blockchain DXB host is incredibly bullish on the future of crypto, especially with the Trump presidency.
Yeah, he portrays Trump as like a champion for the industry, someone who understands the potential of this technology and is willing to create a regulatory environment that encourages innovation.
But is this optimism justified? Is a Trump presidency truly beneficial for Bitcoin and the wider crypto space? There's no easy answer.
Right, there's a lot more to consider. The Blockchain DXB host briefly touches on the developments happening in Dubai and the UAE, particularly in the AI space. They mention a partnership between Oracle and Open Innovation AI to boost AI adoption in the region.
And they also mentioned the collaboration between Italy's Synesthesia and the UAE's G42 to enhance Abu Dhabi's urban management with those AI-driven solutions. It seems like there's a global push for integrating AI into various aspects of our lives.
Exactly. It's not just about cryptocurrency anymore. We're seeing this convergence of technology, finance, and geopolitics all playing a role in shaping the future. But Is it a future that benefits everyone? That's a question we need to consider carefully.
Absolutely. And that's what makes this entire conversation so compelling.
Yeah.
We're witnessing a technological revolution unfold in real time. And it's raising some fundamental questions about how we want to organize our societies and economies. It's not just about the technology itself. It's about the values and principles that guide its development and implementation.
I couldn't agree more so. As we wrap up this part of our deep dive, I want to pose a question to you, our listener. Do you think this convergence of AI, blockchain technology, and global events is ultimately a force for good, or does it present more risks than opportunities? Take some time to ponder that as we move into the final part of our exploration. It's wild to think, how much the world has changed in just a few short years back in 2025. The idea of AI managing entire cities or blockchain tech, revolutionizing finance was still pretty new.
It's true. And as we've been talking about, the blockchain DXB host seemed very confident that a Trump presidency would usher in this new era of innovation and growth in the crypto space.
Yeah, he kept bringing up things like Trump's opposition to CBDCs and his support for deregulation as proof of his, pro-crypto stance.
Is that the whole story? I think it's important to remember that the relationship between governments and, these emerging technologies, it's rarely straightforward.
Exactly. For example, while Trump might have been skeptical of CBDCs, his administration also took steps to regulate other aspects of the crypto industry. Remember the Cryptocurrency Act of 2024.
Oh, right. That act, which passed with, bipartisan support, introduced those new rules for cryptocurrency exchanges, and it aimed to crack down on money laundering and other illicit activities.
And it wasn't just the U.S. Other countries were also grappling with how to regulate this rapidly evolving technology.
Absolutely. China, for instance, took a much stricter approach. They banned cryptocurrency mining and trading altogether. Their concerns about financial stability and capital flight ultimately led to a very different regulatory path.
So while the blockchain DXB host might have been optimistic about the future of crypto under a Trump presidency, it's clear that the reality was much more complex.
And that complexity continues today. Governments around the world are still trying to figure out how to strike that right balance between fostering innovation and protecting consumers.
It's a constant, balancing act, and the stakes are high. The decisions made today will have a ripple effect for years to come.
Think about the potential for AI to exacerbate existing inequalities if it's not developed and deployed ethically.
Right.
Or the possibility of blockchain technology being used to create even more opaque and centralized systems, if it falls into the wrong hands.
These are all critical issues that we as a global community need to address head on. We can't just, blindly embrace new technologies without considering their potential downsides.
The Blockchain DXB podcast focused heavily on Bitcoin and the political landscape surrounding it. But as you mentioned earlier, the episode also touched on those advancements in AI happening in Dubai and the UAE.
Right.
That, to me, is a really significant development.
I agree. It shows that the conversation was already broadening beyond just cryptocurrency. We were beginning to see that convergence of different technologies and their potential to reshape entire industries and society.
The partnership between Oracle and Open Innovation AI, for example, highlighted the growing importance of data security and compliance in a world where AI is becoming, increasingly integrated into our daily lives.
And the collaboration between Italy's Synesthesia and the UAE's G42 to enhance Abu Dhabi's urban management with AI-driven solutions showed the ambition and investment pouring into the space.
But as we've seen with crypto-technological advancements don't always translate into equitable outcomes. It's crucial to ensure that these developments benefit everyone, not just a select few.
And that's where the real challenge lies, I think.
Yeah.
How do we navigate this technological revolution in a way that promotes inclusivity, sustainability, and human well-being?
It's a question that requires, thoughtful consideration and collaboration from all stakeholders, governments, businesses, researchers, and citizens all have a role to play.
So as we wrap up this deep dive into the world of 2025, I want to leave you with a final thought. The future is not predetermined. It's being shaped right now by the choices we make, the conversations we have, and the actions we take.
The Blockchain DXB episode gave us a glimpse into a pivotal moment in time. But it's up to us to learn from the past, engage with the present, and create the future we want to see.
Thanks for joining us on this journey. We hope this deep dive has given you some new perspectives and insights to ponder as you navigate the ever-evolving landscape of technology, finance, and global affairs.